Ladies and gentlemen, good day and welcome to Stallion India Fluorochemicals Ltd Q1 FY26 results conference call hosted by Ventura Securities Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note this conference is being recorded. Before we begin, I would like to point out this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Parth from Confidential Partner. Thank you and over to you, sir.
Good afternoon. Good evening, everyone. Thank you for participating in the Stallion India Fluorochemicals Ltd earnings call. On behalf of Ventura Securities and Confidential Partners, we welcome you all for Q1 FY25-26 earnings concall of Stallion India Fluorochemicals Ltd. The company today is represented by Mr. Shehzad Sariar Rustamji, the Managing Director and CEO of the company, and Mrs. Geetu Yadav, the Director of Stallion India Fluorochemicals. I would now like to hand over the call to Mr. Shehzad Sariar Rustamji for his opening remarks. Thank you and over to you, sir.
Good evening, everyone, and a warm welcome to Stallion India Fluorochemicals Ltd Q1 FY25-26 earnings conference call. We are pleased to start the new financial year on a strong footing, delivering results in line with our growth guidance for Q1. We recorded total revenues of 110.55 crores, representing a robust 50.30% year-on-year increase, driven by sustained demand across key end-user industries and timely execution of orders. EBITDA stood at 14.37 crores, up 12.73% year-on-year, while PAT came in at 10.36 crores, a 21.47% improvement over the same period last year. This performance is particularly encouraging given Q1 is traditionally a seasonally softer quarter for our business. This and the next quarter are usually the lowest quarters, and the last two quarters are the highest quarters. From a strategic perspective, Q1 was marked by meaningful progress in our capacity expansion roadmap. The key milestone was signing of Memorandum of Understanding with the Government of Rajasthan to set up a state-of-the-art R32 refrigerant gas manufacturing plant in Bhilwara. This 120 crore investment will also produce. This is not 120. 120 is mentioned because the government requires the capex only on the plant and machinery, not on land, building, construction, working capital, etc. So the actual project is over 200 crores. We'll also produce advanced blends such as 410A, 404A, 454B, 451CA. So the entire range of other refrigerants, about 8 other refrigerants, will also be manufactured here, which will strengthen our domestic manufacturing footprint, reducing import dependency and positioning us to serve both Indian and export markets from 2026 onwards. Operationally, we continue to advance work on our upcoming Mambatu facility in Andhra Pradesh, which will be a cornerstone for our HFO and specialty gas production, and on the expanding semiconductor and liquid helium capabilities at Khalapur. These investments align with our strategy to tap into high-growth markets such as semiconductor, solar, fiber optics, and advanced cooling applications, sectors that are now projected to grow at strong double-digit CAGRs over the next decade. Our focus remains on safety, sustainability, and delivering customized gas solutions to our customers across all the industry range, including automotive, pharma, fire, safety, defense, and power, with our robust forward integration and backward integration capabilities expanding. geographic footprints, and product diversification into higher margin specialty gases, we are confident of maintaining our targeted 30-35% growth over the next 3 years while enhancing profitability by over 3-4%. We look ahead, we remain committed to becoming a fully integrated fluorochemical player, driving innovation, operational scalability, and sustainable value creation for all stakeholders. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. The first question comes from Vaibhav Mishra from Fine Investors. Please go ahead.
Hello, sir. Congratulations for the good performance. I have a couple of questions, sir. First question is regarding the revenue split between the refrigerant and non-refrigerant segments. And sir, do all the current 4 units handle both refrigerant and non-refrigerant gases, or there is a bifurcation that these units handle this and other units handle this?
Thank you. Firstly, basically, you have to understand the same products are having application in both refrigerant and non-refrigerant use. It is not that they are separate, except for 1 or 2 products which are clearly identified, like SF6, which is used as an insulating gas in the power industry. So, couple of products like that are segregated. Otherwise, most of the products are like multi-use products. They are also used as a refrigerant. They are also used as a firefighting product. They are also used as an aerosol propellant. They are also used as blowing agents. So, it is not exactly separated out into each product that this is for this segment and this product is for this segment. Almost 60% of the products have multi-use, and all the pan-India, all the locations handle all the products.
All right, sir. Thank you. Sir, next question is regarding the new plant that you have just announced in Rajasthan regarding R32 and some other molecules. So, sir, I think in previous call you said that India has more than double capacity for our domestic needs, and a lot of it is exported. Correct? Yes. So, my question is, what will be the capacity of this plant, and will we be using it entirely for ourselves, or we will be generating revenue by selling it domestically or exporting? And if we are planning to export, what will be the geographies where we will majorly be exporting it?
This plant, India already has sufficient capacity for R32, and India also has excess capacity which is exported out of India. Now, basically, we are looking at setting up a 10,000 ton plant for R32. It would be in 2 stages. Stage 1 would be 5,000 tons. Stage 2 would be adding another 5,000 tons. Reason for going with reduced capacity is all our peer industry, like all the current 2 manufacturers in India and others who are also looking at starting up, and other companies abroad also, we have found everyone has gone with the first plant that is usually of 5,000 metric tons, then they scale up. So we don't want to be different from others. Maybe it's a learning graph, maybe it's a learning process, etc. So we would also go in with the same methodology of starting with a 5,000 ton plant and then scaling up. Now, our reason for putting a 5,000 ton metric plant, in addition to it, going in for R32, the basic reason is, number one, we ourselves have a captive requirement of 2,000-3,000 tons, which we currently sell. So our own requirement is there. Why do we have to import it? Or why do we have to depend on somebody else? And when we started, everyone wanted to know, do we manufacture the molecule? We formulate, we blend, we debulk, we pack, we provide it, but we don't manufacture. So now we would like to go into backward integration. As a company, none of the other manufacturers are forward integrated. Ours is the only company which is completely forward integrated, pan-India. Now, if we go into backward integration, it makes the company almost, it's on a different level. You're fully backward integrated, forward integrated. So that is one of the key strengths that would come out. Second, more important, all the next generation HFO blends contain 50 to 60% R32. That means if we don't have our own R32 manufacturing, as we go forward and we build thousands of tons of HFO capacity, even if we manufacture HFO, you will still depend on 50% of your requirement from either local source or import. So to ensure and securitize the future, we are looking at not today, we're not looking 4 years from now. We are looking 10 years and 20 years ahead. And if we have our own plant, we become more secure, we become more stable as a manufacturer, where complete the end-to-end, all the products are under our control. So this was the reason for going in for the R32 plant.
All right, sir. So the remaining, we need 2,000 or 3,000 capacity only. So we'll be, exporting it majorly, the remaining amount.
It's like this. HFO blends are expected to grow by hugely, number one. Number two, your R32 in air conditioners is going to be replaced by R454B. The reason it will replace it is R32 has 600 GWP, global warming potential, and R454B has 300 GWP, half the global warming potential. So as we go forward, R32 that is used in air conditioners currently will stop getting used. The HFO blend will come in its place. So that 10,000-15,000 tons of R32 currently in use will start getting replaced in time by manufacturers, by legislation, to the new HFO blend. Similarly, you will have changes like R134A. R134A will start getting replaced. You have over 10,000 tons of usage. So a big portion of this use will convert to 513A, which is a HFO blend, again having 50% 32. So now when you move into this new category of products, your requirement will go up substantially. It's not just what your requirement. Maybe we sell 32 on its own, say 3,000, 2,000 tons. But technically, when you see it in the blends and everything, it will go up phenomenally. Secondly, we may not look at exporting 32 per se. We may export the 32 and HFO blends, which would be more profitable and more viable rather than just the 32.
All right, sir. All right. Thank you so much. Sir, last, the margins out on order, but there is some decrease in YOY terms. So, going ahead, sir, what margin profile can we expect? Like stable and improving slightly with quarters, or there might be sharp fluctuations in between quarters?
No, I'll explain. See, basically, this is a pertinent question. मेरे हिसाब से everyone would be wanting to, this question may be with everyone. ये आपका PAT और जो EBITDA था in Q1 of 23-24 is not the same as in 24-25. Meaning it's 25-26 and 24-25. There's a difference. Yes, it's in basically this quarter, April to June, is the second weakest quarter. July to September is the weakest quarter in the business cycle. Then October to December is meaning the better quarter, and the last quarter is the strongest quarter. So the last two quarters are the strongest quarter. The first two quarters are the weak quarter. Now, particularly this year, we were very optimistic of actually having a phenomenal meaning growth in the turnover and the PAT and everything. But April, as soon as the quarter started, you had the war with Pakistan. The minute it happened, everything, all industry, all projects, everything just went off to sleep. Everyone, like COVID time, started making plans of how they will deal with it, etc. Companies came on a, like even for the SF6 and all the projects are in the forward areas, border areas, Kutch, etc. So everything came to a standstill, number one. Number two, as soon as that issue died down and things look like it's coming back to normalcy, early monsoon set in May. It completely washed out the entire season. Now, basically, we had to keep in mind whether we want to target turnover growth or we want to sacrifice it for higher PAT. So in an absolutely dull market where the season is over, everything is closed, we ensure that we maintain the turnover growth at a slightly lower PAT. That is the reason for the PAT being slightly lower.
All right, sir. All right. Thank you so much, sir, for clarifying it very patiently and clearly, and all the best, sir, for the future.
Thank you.
Thank you, sir. The next question comes from Aditya Arora from P4 Capital. Please go ahead.
Sir, thank you so much for your time for this call and for taking our question. We have two very basic questions. If you could help us understand the value chain of the company, or what are the raw materials that you are procuring from where, and how does the price fluctuate? Plus, after the planned backward integration, what kind of raw materials would you start manufacturing in-house?
Thank you. Basically, see, currently, as a company, currently we do not manufacture the molecule. What we do is we import in bulk ISO tanks, 20-ton ISO tanks. They come to all our plants. They are unloaded into our holding tanks. They are tested for our incoming quality. They are tested when the processing is done, cylinder cleaning, processing, filling is done. It's again tested. Half the product goes into formulations and blending. So you're making the rest of the products which are blends of 2 or more gases. So when that is done, that's tested, and about 30-40% of it goes to OEMs, 60 to 70% goes to aftermarket through the pan-India plants that we have. Now, currently, when we get into manufacturing, this would be a proper manufacturing of the molecule per se, not a formulation or blending. That means you have a reactor, you have chimneys, you have a waste stream, you have raw materials that are different form. So now the basic raw materials that would be AHF, MDC that would come in, and your production stream would have number one, 32 would be there. Hydrochloric acid would be one of the byproducts, which is also saleable product. It's not a waste stream. And dilute hydrofluoric acid, which again becomes a saleable product. You reconcentrate it or treat it, and that itself is also a saleable product. So basically, in the current manufacture, we would look at making sure that we have no waste stream, and all products are commercialized, so that there is a value addition that comes to the company from that also. Now, basically, this manufacturing plant will also be manufacturing most of the blends, and which mostly will be having 32 also as part of it, and basically our 32. And this would be our first plant where we go in for the manufacture, which will also give us and our investor the confidence that not only can we set it up, we can run it successfully, and it allows us to plan ahead for the remaining plants that we already have plans in place for. Now, basically, currently our PAT is usually averaging about 10%. Now, 10% is very good for a company in our field, the way we are. Meaning, if you look around, you won't find such a robust PAT. That's because of our pan-India footprint, because of the 30 years experience and knowledge that we carry, and also the way of the company is working. Now, when we get into manufacturing, the PAT out in the manufacturing segment would be over 24%. So that 24%, plus also for the helium and specialty gases, semiconductor gases, etc., that we are setting up, that also will enhance the PAT significantly. So we can see once both these come on stream in 26, we can see the PAT significantly enhanced from where we are. Meaning at an average it might reach about like 17 or 18%, considering that our current turnover also is growing. So averaging between them, we should look at higher PATs, which would be beneficial for the company.
Right. No, this is super helpful. Just a couple of follow-on questions on that. When you set up this backward integration facility and you start manufacturing most of the products in-house, does it require approval from your end customers, given that you will move towards OEM side, or they generally don't give approvals on the plant?
See, it's like this. In the market, in a developed product, meaning new products, OEM requirement is almost 80 or 90%, and aftermarket is 10%. But in developed products, the aftermarket is 80 to 85%, and OEMs is 15%. So basically, you have 85% of the India market available to you, number one, without a single OEM approval. Secondly, we are already approved in every single OEM, and OEMs do have a qualification process. Now, usually that process is very long and tedious when it is an unknown new party with no track record, no service record, no reliability record. Stallion is a company that's 30 years. Stallion is the only company in India, and I say, this is a recorded call and I say it on record. Stallion in 30 years is the only company in India which has never failed or had a break in supply. In 2005, in 2010, in 2017, as late as 2021, Stallion is the only company that supported 100% of India requirement for few months when there was a shortage and none of the other manufacturers or multinationals had material or could supply. That is our track record. And this is on record I am speaking. So there is nobody else with our track record in supply and reliability. As a result, when a company like us has to be qualified, almost 85% of the parameters are moved aside. Now it's just a product evaluation. Product evaluation simply becomes just a lab testing. So once the lab testing is done, product evaluation, meaning they take it on trials, etc., it's a very quick process. Usually, suppose if we were completely new to the industry where we have no past record, the company has to first think that will this person last out? Second, will they be reliable? Can we trust them against our existing supplier for so many years? All those parameters don't come in for us. It's only the product qualification. Product qualification is very fast and can be done very quickly, a month, 2 months.
Okay, sir. No, this is extremely helpful. And sir, this last question is on pricing. How is the pricing determined? Is it on an order-to-order basis or it's a annual fixed price contract?
Prices are market driven. You have different models of working. Now, aftermarket has a spot pricing. That means the price we open, suddenly after 15 days we find that the market has gone up, we increase it. We find the price we want to reduce it, we'll reduce it. So aftermarket, which is the bulk of the market, is a spot price market. OEMs have 3 models of pricing. One is an annual price, one is a quarterly price, and one is a monthly price. There are times when it is advantageous to be in an annual contract. There are times when it's advantageous to be in a quarterly or monthly contract. Currently, the global scenario is you are the luckiest if you are in a monthly contract or at best quarterly. Annual contract, you will come out losing money. The dollar fluctuation is very unpredictable. Although all contracts will say, okay, the dollar is at this price, but nobody really increases the price and gives you. So it is advisable not to be stuck in long contracts especially in a volatile global scenario.
Great. Okay. Thank you so much, sir. I'll come back and queue if there's anything.
Thank you.
Thank you, sir. Participants are kindly requested to restrict with 3 questions in the initial round and join back the queue for more questions. The next question comes from Jay Mehta from Helios. Please go ahead.
Hello, sir. Am I audible?
Yes.
Congratulations, sir, firstly on the good set of numbers you posted yesterday. Sir, I wanted to ask, firstly, like, what's the progress on the blending facility which you were about to set from the IPO proceeds, like for the Khalapur and Mumbai to Andhra Pradesh? Because in the, like, the quarterly, like, disclosure, you have only spent like 1 CR for Mumbai to in the till the time of June end.
Okay. Firstly, thank you. And basically, as a company, we are very prudent on how we spend money. We do not believe in giving advances too quickly. We do not believe in, giving money before work is done. So when you're seeing the restricted flow of payments, is partly due to that reason. Just because funds have come doesn't mean we distribute it to everyone and say, okay, take and start the work. It is all the contracts have been given. I'll break it up into 2. One is, first I'll go with the Khalapur. Khalapur facility, the entire civil work of restoring the land, making all the supporting walls, etc., everything is completed. The plinth level of the working factory shed is completed. The metal structure has been completed. Right now, we are going in for the completion of the shed firstly. The compressors have been ordered, the dewars have been ordered, cylinders have been ordered, all the plant and equipment, machinery, whatever is required, all that has been ordered. Now, Khalapur was delayed. The timeline we are going to meet completely, but the construction was delayed for 2 accounts. This is same for Mumbai also. First is the onset of early monsoon in May. Once it rains and the soil gets wet, you cannot work. So where there is soil work required, where you require to condition the ground, where you require to do mud filling. If once all the soil is wet, it's anyone in construction or if you have knowledge, you'll understand that it is impossible to work at that time. So firstly, because of early monsoons, it got delayed. Second, when we started this IPO, we started this process in 23. We got delayed by 1 year. So 24 went. Now during this period, so when we started this process for semiconductor gases, helium, and all the high purity gases, the industry standard was 200 bar cylinders. It is a little technical, but it will help you understand a critical thing. Now 200 bar is the pressure at which you fill the gas in. So suppose in a 50 liter cylinder, if I fill 200 bar, I can fill 7 cubic meters of gas. Now, basically during this period of when the IPO is happening, Linde, technically I shouldn't name, one of the MNC companies, meaning of the peer group, they moved the standard to 300 bars. They're the only people in India with 300 bars filling. That means for the same 50 kg cylinder, where you are filling 7 cubic meter, they can fill 11 cubic meter or 10 cubic meter. So what happens is, now you'll say, why is this different? When you have to move the same quantity of gas long distances in transport, you are paying for, say, I'm just giving example, 7 into 100, 700 cubic meters, you are paying X amount for transporting. In that same cost, they are transporting 1100. So now, versus you in any tender, in any supply, in any bid, they will become more competitive. And forget the competitiveness, especially for ONGC, offshore, Navy, etc., where you have to load it onto ships, etc. It becomes very critical to have more material in less amount of space. So preference will go there. So this was a very critical factor and upgrade in the entire industrial cycle of how the plants and all are done. Now, everyone else cannot run and do this because it's a major re-engineering and redesign of the existing plant at huge cost. Now, the good advantage was, because of our delay in IPO, our construction starts when we realize that this new change has come about. So we went in for complete design and re-engineering the entire plant to now become a 300 bar plant. Even the capex that we require on cylinders and all, 50% will go towards 300 bar equipment rather than 200 bar. So now when we start off, we will be next to the best and biggest with the latest technology or the latest innovation in the industry, and everyone else will be not having that currently. So this engineering change, design change, etc., it took 2 months, number one. Second, also the onset of monsoon. So though there's a slight delay, but in the final timeline, we will be within the timeline that we have said we will complete. Number two, basically major landfill was required there because that was like 5 feet below ground levels. And next to it, adjoining is a lake. So that entire area in monsoon gets flooded. Now, the landfill was supposed to have started in April and May. So April, whatever you need to do groundwork, May you start the work. Again, monsoons, unseasonal rains, water filled up out there, you could not do anything. The work started only in July. Landfill is completed, boundary wall is started, all the construction work is now proceeding. By September, we should have construction at site. The plant and machinery is all ordered. Everything will reach there in September. October, we should have meaning most of the layout completion, etc. And we should be within timeline or maximum 1 month delayed there, but we expect to reach timeline for Mambatu also. Helium Khalapur would be on timeline. Second, now Mambatu I would like to explain. Mambatu capex was paid for 5 tanks of HFO blending. We have doubled the capacity. We have gone in for a 10-tank capacity. We have also enhanced the complete working to handle hydrocarbons, which will be a future in all the working. Will require it in a big way. Number two, we have also gone for the same semiconductor facility, what we have at Khalapur, what we are setting up. We have also put that setup in the Mambatu layout. So there we had a complete, it took us 3 months to completely redesign, rechange the entire setup. Earlier it was 2 sheds, now it is 5 sheds. So the complete layout, firstly the scale and scope has been doubled. And the enhanced level of working, etc., that is what took a certain amount of time. And also the planning for the cash flow and for accommodating and licensing everything in it. So this is the flow of both the material. At both places, there will be no real impact in timeline. Khalapur should be well within the timeline. Mambatu, also we expect we will fulfill within timeline. At worst, it may be 1 month delayed. That 1 month also is not on equipment, construction, etc. It will be more on licensing.
Understood, sir. My second question was, in the last quarter, there was some cyclical upturn you mentioned, like due to that your gross margin shot up. So what is the current state, and going forward, what will be it?
Basically, what happens is all products have a cyclical nature of movement, meaning a strong period, a weak period. Like whether you take, now we break down the semiconductor side, we break down like say helium. So helium has got like a period where 2 years will be down, and again 3 years will be up. The refrigerants also have the same cycle, 2 years, 3 years, or 2 years, 1 year up, 2 years again down, and 3 years up. So it's got everything has a graph moving up and down. The reason of expanding and having a reach across industry segments is one or the other segment will coincide with each other. Now, last quarter that we did, the turnover, etc., the whole year looked like it would go great, meaning it was very strong, the growth was very strong, everything was very strong. Come April, that fear, and thereafter the rains, completely, strength in the market, suddenly you found had weakened. And that's what did not allow that same robust growth to continue. Otherwise, April, May, June we were expecting that we would have a very spectacular result in line with the Q4 of last year, and it would be spectacular versus Q1 results. But still, I think we have managed an excellent show, because if you see similar industries or similar industrial businesses like, say, the appliance manufacturers, etc., you'll see a very weak showing in this quarter. So and remember, ours is without export earnings. Meaning, if you're comparing us with peer groups, they have export earnings, which is currently giving phenomenon. Now, of course, after Trump and the duties that they've put, it might not be that great onwards. But basically, we are operating without that margins also. So the showing was pretty good for the quarter. Meaning, if I'm looking at it objectively, I am very satisfied with how we have performed.
Understood, sir. And sir, my third question was like the 200 crore capex you are going to occur for the manufacturing for R32. So by when it will be operations, and out of the 500 crore that you also mentioned in the the last board resolution, will it be utilized entirely for this, or what is it?
Firstly, we have this, we have to give disclosures as per whatever or material things on whatever is passed in the board. Now, in the board, we have taken approval, and with the shareholders meeting, we will take approval for up to 500 crores. We do not intend to dilute, or we do not intend to raise 500 crores. Okay. Basically, the permission is granted for 1 year. So basically, in case if something else comes about, we don't want to redo the whole process. So you always ask for a higher amount. So the approvals are taken for a higher amount. This is not an amount that we would be going in for, number one. Number two, whatever we go in for, whether we go in for debt or whether we go in for a rights or basically preferential issue or anything, that will be decided as we move ahead. Currently, from in-house, we have been making whatever the capex spends are, and we're proceeding with that currently. But definitely, we would require to access for funds, either debt or equity.
And the date of operation for the plant?
Currently, we should give the good news in, I think, a day or two. Maybe I can give it here also. Anyhow, we're going to be putting it on in a day or so. We'll be putting it on. Land is acquired, and we would move for permissions immediately. And we expect to complete construction and start production by mid-26.
Okay, sir. Okay, sir, I'll join back in the queue.
Thank you, sir. The next question comes from Naga Brahma from NB Investments. Please go ahead.
Can you hear me?
Yes, sir.
Okay. Good evening, sir. Congratulations for a good performance. Sir, I had a lot of questions, but since I'm allowed only 3, so I'll start with my initial question. If you had seen your sales figures, it was 118 crores in FY21, which jumped to 186 in FY22. Thereafter, it was stabilized in around 220 or so. Then again, FY25, that is last year, it has again jumped to 377 crores. Now, I know 24 to 25, the jump was due to acquisition of our own company, so that's why the revenues had increased more than the normal growth. But if you could tell us why this increase was there during 21 to 22?
21 to 22. It's a little back.
From 122.
Yeah.
Is it that because of the HF, this one was made mandatory, something, any reason, HFC?
No, I'll tell you what okay, now I remember. Anti-dumping duty got established in India on R32. So prior to establishing of anti-dumping duty, which is almost, R22 was sold at 250 rupees at that time. I'm just giving you the baseline. Don't take the exact figure. So about 250. Anti-dumping duty of about 125 to 150 rupees got introduced on it. So what was sold at 250 would suddenly become 450 or 400 rupees. So what happened was a massive import. As much as anyone you could import, you imported. And also, post the anti-dumping, like we carry huge inventories, and that huge inventory was very good at that time, because what it allowed us to do is, immediately with the anti-dumping coming in, our turnover immediately jumped up. The price went up, basically.
Okay,
the price doubled.
Got it. Fine. Sir, my second question is, this electronic, solar, and fiber optic ecosystems are expected to grow at double-digit CAGR. So we are coming up with this both helium as well as the HFOs. So these sectors use both of this? If it is yes, so where are they sourcing it currently? And how is the competition in this segment?
I'll tell you. HFOs are not used basically in fiber optics, etc. Now, see, most of the products have multi-use. You cannot say that it's not used in the sense it is used in a cleaning. The same product that's used as a growing agent is also used as a cleaning solvent. So it's got multi-utilization in various industrial segments. Now, SF6, which is used as a insulating gas insulated substations, large voltage transformers and circuit breakers, is also used in your eye for operation.
Okay.
It's got a medical application also. So when you go for a eye surgery, SF6 gas is used.
Okay.
SF6 gas is also used for plasma etching, for making silicon wafers. So it's got multiple, each product has multi-application. It's not just one application that we can segmentize that this product is only. Yes, the difference is the same product with higher grade of purity. So what goes into your eye is not what goes into the electrical substation. And what goes into plasma etching is not the same as that. Meaning the purity grades are higher. So one is that. Second is your HFOs. They may not directly be used in semiconductors. Now your data centers, the government has been very wise in its approach in ensuring that Indian data stays on Indian shore and is not offshore in the US or somewhere else. So, to safeguard the data that is here. So now there's suddenly all these companies like Amazon, etc., have huge data centers that are coming up in India. Now for this data center cooling, you need to have that specialized cooling. That's where the HFOs come in place.
True.
So, like same way in semiconductors also, the equipment cooling, the HFOs come into place. They don't play direct role in the semiconductor. And in semiconductors and all the other fields like fiber optics, etc., all the various gases that would be required, it's a growing field. Basically, India never had semiconductors earlier. So it's virgin and it would grow from here. So as it grows, there would be scope to grow. Now, who are the players? In India, in the HFCs, you have 3 established companies already. You all know the names.
No, sir, I was asking for HFOs and helium.
HFOs is under heavy patent. So currently, besides Chemour and Honeywell has been associated with us since 20 years.
Correct.
So we are basically Honeywell, you can take, meaning the partner here. So besides these two companies, nobody has a patent to sell.
Okay.
It's a heavily patented product. So currently we have first mover advantage. None of the local big players who manufacture HFCs, they cannot manufacture or sell HFOs in India.
So only we are authorized to do that.
Only we are authorized to do it. So the first mover advantage comes about.
Okay. So my next question is, like in South Mombatu, we are coming up with the HFO as well as now you have announced in the, last day, yesterday that, we are coming there with the helium also. So my question is, already in South particularly and in rest of the India also, have they already started using these HFOs?
Yes. We sell quite a good quantity. In fact, if I'm not mistaken, over 300-400 tons were already sold.
Oh, okay. So that means all over India, only our company is selling this?
No, our company and Chemur. Chemur is earlier DuPont.
Ah, correct. Okay. Okay. So both of us are only selling this. Hello?
Yeah, both of us.
Yeah, both of us. Okay. Thank you very much. And I will come back in the queue. Thank you.
Thank you.
Thank you, sir. The next question comes from Darshil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. Hopefully, I'm audible.
Yes.
Hello. Yeah. Hi, sir. So I had a few clarification questions, sir. So when we are talking about PAT margin post manufacturing, so what were we saying around 17-18% PAT that we can get post manufacturing, sir? When we start manufacturing, yeah.
Yeah, sorry, I'll just answer. It is, our current margins in the current operations that we have hover around 10%, 9% to 11%, averaging 10%. Now, when you go in for manufacturing, your margins, your PAT will move to 24%. When we go for the helium and semiconductor specialty gases, the margins will be between 18 to 20% in that business. So now basically taking the PAT of both those businesses, the manufacturing businesses and our current business, when you average it out, there would be, like this business is 10, that is 24. So you'll average somewhere between around 17-18%. And as we grow the manufacturing business, your PAT will start increasing. Because what we have in mind is after this first plant, now I'll just put it to you how our plan of growth is. Meaning it may seem little aggressive to you all, but it's 30 years of planning, 30 years of waiting, 30 years of wanting to move ahead. A reason for entering into the capital markets was not, we didn't want to liquidate or we didn't have any bad debts or anything. We wanted to grow at a phenomenal pace. We had acquired all the knowledge, all the experience, all the working areas that we needed to have experience, whatever we needed to do at every stage, and a pan-India of presence. So now to move up that chain, you would require capital to grow at that phenomenal pace. So basically, while we went in for the IPO, when we took the capex and we started the work for the Mambatu and the Khalapur facility, we had already, when the IPO took place, the first meeting we had, we had already drawn up the plans for this manufacturing facility in Rajasthan. So basically the idea is, as each project is taking off, we would already have initiated what is the one after this, such that 50% of the work is done. Halfway, midway through the earlier project getting completed, we will start the next project planning and the footprints for that, such that as one project gets completed and that cash flow starts, the second project work should start off. It shouldn't be like 2 years after that. I mean, we don't have all that time. So when we are already doing this capex for this plant, we already have a growth strategy worked out where we would already be planning. Once we finish all the permissions, we finish the funding, start the construction phase, we will get onto the plan to the next manufacturing plan that we have. So it will be in a series. As one stops, the second one starts. The second one stops, the third one starts. So before year 29,
fair enough, sir.
we've got a very clear growth target. Yeah, tell me, sorry.
Yeah, so sorry, sir, to cut you off, sir. You were continuing, sir. Yeah.
Basically, we've got a very clear growth strategy of what we want to see our turnover, where we want to see ourselves, and how we are going to complete it in this much time. So basically, that's how we're taking it.
Okay. That's really great to know, sir. So, sir, just wanted to know, like, post now, because our Khalapur and Mambatu will come by nearly October. So in FY26, they'll be in full operation. So what kind of revenue can we expect incrementally from these two capacities? And how much will also Rajasthan contribute? Because that also we are planning to start production by mid 26. So what kind of incremental revenue will come from these three capacities for us, sir?
We would be publishing, October we won't be starting Mambatu or Khalapur. It is expected November end is what the timeline has been provided. So basically we get one quarter for both of them. In this year we may not see very much support coming out for it. It's the start of the thing. But definitely in 26, we would see it adding significantly. Like it would be on an incremental percentage. It won't be like that this is the turnover. So it might add like 100 crores in 26. It may add another 100 crores in 27. Like that. So one is that. And second is the manufacturing plant. It depends. We hope to start complete. It's very ambitious. Any other company, that's what we'll be talking 27, not 26. We are talking 26 because we would want to bring it as fast as possible online for a variety of reasons, and specifically also for the turnover. If you take a 5,000 ton plant and you take it at the lowest selling price of, or you take it as current selling price of 540, you're talking of 270 crores turnover divided by 2. So like 135 crore turnover with a 24-25% PAT. Number one. And then when you add the second facility, it will give you 270 plus 270. Currently we're starting with 5,000. So we would be adding 135 in the first year and 270 in the second year. And as we go for the expansion, that would add another 270.
Oh, that's very ambitious. So just because I think in the presentation we were mentioning about 30-35% growth, but with these capexes, we would be maybe growing in multiples rather than 30-35%, right?
We are talking of growing in multiples till 29 to achieve what our targeted turnover is.
So what's the internal target? Like I think at this rate by FY29 we would be easily maybe on my rough calculation 1,000. Sorry, how much, sir?
We are looking with the manufacturing plants and the final plants, etc. Our target is to cross 2,500 crores.
Okay, that's really great to know, sir, and that's really helpful. And that's such
There's not the only manufacturing plant we have in mind. We have a series of plants, one after another, that will be put up. That's what I said, 30 years in waiting, 30 years of having projects on hand, 30 years of the experience and knowledge. So now fructify and bring that into actual happening, it would require the capital markets. That is why we entered the capital market.
And we would be very happy to come along with you in this journey. So just at that part, we would be around 20% PAT margin is what we are roughly looking at, right? At that scale.
Actual manufacturing will all move to 20-24% PAT.
Oh, okay. That's really great to know, sir. And sir, just wanted to know, like, all of this we would want to do via capital markets, or we will also have to raise some debt, or how would you see funding?
we would also see, very honestly, we sat and we had a good discussion on whether we should go down the debt route right now, and then when the prices go up, share prices move up, that time, dilute it at that time. In this first one, we would be going down equity, but onwards, we would definitely take a good look and maybe see debt first and then, dilute it onwards.
Okay, that's great to know, sir. Thank you so much for such a well, set plan, and all the best, sir. Hope to be on this journey with you. Thank you.
Just to give a little thought to you all also. We may not even go down the debt or this. We have a lot of customers, meaning big OEMs, who would like to be part of the project, wherein they give you the amount and ask you to amortize it over a period of time also. So it is not necessary that we may go down the debt or the equity. We are just taking all the permissions, because what happens is, we are disclosing to the market. You all are investors. We have to disclose what is it in our head. So we are putting that, okay, we require to take the permissions. We need to disclose that we intend to raise this much money. How we intend to raise it, fine. Either it's debt, it's equity, or it may be amortization advance. So we may go down any route. Whatever is the route that suits best and allows us faster move is what we would follow. But whatever we do, we will ensure that it allows complete financial stability to the company.
Okay. That's really great to know, sir. Thank you so much, sir. All the best.
Thank you.
Thank you, sir. The next question comes from Manan Gandhi from Keystone Asset Management. Please go ahead.
Thank you for taking my question, and most of the questions are already answered. But just one simple question that, as you mentioned, that quarter 2 is usually the weakest quarter. So can we expect some more dip in the next quarter, or is it going to be the same lines of the current quarter?
When I gave the closing of the last year's performance, so the Q4 24-25, I had said we will grow 30% year on year. Now, usually, if you see all the statements I have made in the last 3 years, especially after we applied for the IPO, etc., we have never failed in any statement. We have never failed in any commitment that we have provided. We're very, we ensure to downplay what we commit, because whatever we say, we hope that we will never fail in that commitment. So we have committed 30% year-on-year growth. So quarter to quarter, you will see, comparing with the last year's quarter, we will try to be in line with that growth percentage.
Okay. Like really happy to know that you have a very long vision of 5, 10, 15 years where we have started, this R32 manufacturing. And as rightly said earlier by someone, that we would surely want to be the part in this growth story with you. So kudos to the good work, and all the best for the upcoming endeavors.
Thank you.
Thank you, sir. The next question comes from Tushar Bhavsar from Cognizant 4D Motion Pictures. Please go ahead.
Hi. Yeah, this is Tushar, and congratulations for the great numbers.
Thank you.
You guys can hear me, right? I'm on the road, so.
Yes, audible.
Yeah, okay. So I think a lot of the questions have been answered, but still, one of the question is, what is the dependency, that we have on Chinese imports, percentage-wise, and what are the future plans on, if the Modi government, completely stops Chinese imports or some kind of, things happen between us. So what is the risk strategy, risk management strategy do we have for that? And, what percentage of the R32 manufacturing will, or any other manufacturing plans that we have, circumvent, the import percentages?
It's a very deep question. Technically, it would take me, to give you a very thorough reply, it would take me almost 2 hours. Let me try to shorten and give you the viewpoint. Basically, see, we come from the field with such a long, with so many years of experience and knowledge. So what happens is our overview of how we see it. It may be very different from how analysts or investors or others may have of the whole thing. Now, I have been particularly part of the alternate to China plus one strategy, even with the government of India. In fact, like for a couple of products where we have almost dominance, the government had called on us that how can we do alternate. So now you have to understand two things. When China was growing and when the US allowed China to grow, what happened was they took dominance in most fields by government support. Classic example, like, Morbi was so powerful in making tiles. It was like the tile capital of India. Today, not one manufacturer there manufactures tiles. Everything comes from China. Then, why is it that China could make it better, make it cheaper, make it this? There was a overpowering government support towards each segment. So similarly, you have towards rare earth, you have towards minerals, specific minerals like fluorospar and other products. And because a lot of these were polluting, other governments, other countries decided, okay, we've got somebody who's, does not mind doing polluting industries and spoiling that, their environment, it's good to outsource that out there. Suddenly you find no country has rare earth capability, mining capability. Now suddenly the world has woken up and now they're running around all over the place to get, okay, what are the alternates? But when, for 20, 30 years, you allow the country to have dominance. So suddenly you cannot get up overnight and say, what if you don't want to deal with China? Okay, you can decide not to deal with China, but you may not be very competitive. So how it is to be done is, now technically, most of the products we get come from China. You will say, why? Why is it China? Why not US? Well, technically, we do get 50% of our products from US. We get it from Honeywell. But the problem is Honeywell has stopped manufacturing in US and Kenwood has stopped manufacturing in US. And they all contracted out to China. So you may get the material from US, but the source is China. So as a result, China made sure that they had dominance. Like in fluorochemicals, China has 85% global dominance. Why they can move pricing is, one fine day the government just tells all the industry, okay, from tomorrow the price is not $5, it's $7. So they save $7. Now even if I've got a plant here and I'm manufacturing, the whole world has moved to $7. Why will I sell at $5? So what happens is, it is not very easy first to dealing 100% completely, because though you may manufacture 32 years, you would get fluorospar from China. Maybe not from China, you'll get from Vietnam, you'll get from Mexico, but indirectly the China factor will impact you because China will move the price up and down how they want it globally, because they have the dominance in the minerals, number one. So now the world is waking up. Everyone is now getting capacities and starting alternate capacities everywhere. It will take time for it to filter down. But instantly, if you say, as of today morning, that I don't want anything China, it's not possible. Second, more important is, after the latest impact with US in the tariff war, the Indian government has also realized there's no permanent friends, there's no permanent enemies. And I think we're moving back towards Asia first. So suddenly, it's not going to be so much of a taboo dealing with China again. But the purpose of setting up the local manufacturing is we don't want to import from China. We would like to have our own manufacturing capabilities here. And the raw materials also would be sourced alternate to China.
Thank you, sir. The next question comes from Swaminathan, an individual investor. Please go ahead.
Sir, very good afternoon, sir. Can you hear me?
Yes, good afternoon. I can hear you, sir. Sir, most of my, question which I prepared was answered by you, very, very kindly and very elaborately. Sir, only one simple question I have. I don't think you have, answered as someone has asked. Regarding the EBITDA margin, sir, EBITDA margin for the current year and the ongoing coming year, what would be the EBITDA margin, sir, on an average we can expect?
See, currently, the EBITDA margins of this quarter, basically, it was about 13%, number one. In the same quarter earlier, it was much higher. However, going forward, as we move towards manufacturing, the EBITDA margins will be much higher. Meaning, if your PAT is going to be, you're expecting a PAT of 22 to 24%, your EBITDA will be significantly higher.
Right, sir. But in general, can you give a bracket numbers within this to this, like that kind of thing?
Since we don't have the figures of a manufacturing activity, meaning on a scale model, I could say it's 30%. But again, like I said, we need to see the numbers properly first.
Fantastic, sir. Thank you, sir. Thank you so much. We are very happy to be part of Stallion India Fluorochemicals.
Thank you.
Thank you, sir. Participants are kindly requested to restrict with 2 questions in the initial round and join back the queue for more questions. The next question comes from Chetan Cheda from Individual Investor. Please go ahead.
Yeah, hi. Thank you for the opportunity. I mentioned, sir, you mentioning that you have an ambition to reach 2,500 crores. Could you clarify, like, by when do you aim to achieve this top line?
Firstly, I would request to, Firstly, thank you. I would request to disregard the figure I said for the simple reason we don't want it as a number that we are floating or we are trying to save, right? Basically, what to just explain that the company has very ambitious numbers, and it would require us to grow in, it wouldn't be like percentage growth. It would have to be in a number of times we would have to grow to reach that kind of number. Now, basically, anything that a company does, if it has to be tangible, has to be within a 5-year time frame. Anything that we're talking has to be done within 2030 to make any sense. Meaning, I cannot say that, okay, by 2050, none of us will be around. So, it has to be in a 5-year time frame, anything that you're proposing or wanting to do. Now, that is a target we have put where our entire team, everyone, is working towards. Now, to do that, we would have to have a series of manufacturing plants that come up. 32, the plant that we're putting is the smallest of them. The reason it is we are going with this plant is, it is firstly like our first foray into a physical manufacturing plant, where it would give us all the experience, all the knowledge. It would also give all our investors, all our partners, a very clear understanding, do we have the capability or not? The next plants that would come about, whichever they are, they would not be of this scale. They would be much bigger. The revenue expected to be generated from those would be much higher. So it would be a series, like 2 or 3 more after this, that would come up. And this is the company's plan. This is the vision. This is what we are working towards. How much we succeed, meaning this year, next year, as we cross each milestone, it will become clear for everyone. See, we are in no hurry. If you've noticed one thing, we have not been very investor savvy or stock market savvy, where we come out with flyers or we come out with, we try to boost anything. We are single-mindedly, dedicatedly, we are working towards the growth plan. We believe one simple thing is a company is, you make the company professional, you make the company in a growth mode, you deliver what you have been saying, automatically the markets will recognize that. So
our methodology has been more to allow the market to see our performance quarter to quarter, see our growth year to year, see our vision, how we are planning to grow the company. I think that would allow, the investors, the market, everyone to understand from where we are coming and where we plan to go. Yeah, the vision, just the number. You have to have a target towards which you're working. If you don't have a goal post, you'll just be running all over the place. So yes, we have a target, we have a goal post. Those are not numbers that we are throwing around to say that this is where we'll reach, this is what we'll do. That is something we are working towards.
Sure. Thank you so much for the detailed explanation. Wish you all the best. Godspeed. Thank you.
Thank you.
Thank you, sir. The next question comes from Abhi, an individual investor. Please go ahead.
Hi, Rustomji. How are you going?
Thank you. Fine.
So I have a very easy question for you. You were sitting on 100 crores of inventory as of March. What is the inventory you currently have now?
It's basically, let me put it this way. It is not a high inventory that we are sitting on. It is an inventory that we would continue to carry because that allows us to two things. Firstly, provide reliability. See, most of the material coming through the South China Sea, either you face some disturbances due to the issues out there, or climatic disturbances which disrupt all trade, meaning movement. Or finally, if all this is not bad enough, then you have trade disturbances where you suddenly have freight getting, monetized. Like last year, you had the freight from here to America move from $2,000 to $10,000. You had the freight to India jump up almost 3 times. And that was monetizing of the freight part. So Chinese are innovative in multiple of ways. Meaning, if they want to move, if they cannot move the price of goods, they'll move the price of freight. All the shipping is majorly controlled by them. So now, when you have this kind of fluctuations, or you have forex fluctuations, or you have anything, how is it that you will manage to give continuity to all the OEMs you deal with? Number one, on the guaranteed price, and on second, on the supply segment, the reliability factor. So for us, it is not that it is a high inventory. It is an inventory by choice that we have. And secondly, it also pays off dividends.
Yes. I completely understand. I think you have explained it in the last con call as well, that that's how you combat the prices for fluctuations, and that's where the industry experience comes in handy in terms of when you have the inventory, you don't have to buy at a higher price when the market is, the prices just goes really high. So I completely understand that. I was just checking, I guess, what is the level probably as a June or July approximately?
More or less, Ebony, I can take the exact figures and say I may not have it immediately right now on this con call, but I can tell you confidently it would be closer around. That is the level of inventory we're comfortable with. And secondly, you have to understand in an industrial cycle, in this product cycle, in the industry cycle, the fluctuations go as much as 100%. So there are times when you're sitting on high inventory. Now, you remember the quarter of December where we had a very good performance. Why did we have the good performance? We were sitting on inventory and the price went up by 25%. In Jan.
You were able to mark up your prices. Yes.
Yeah, it pays out beautiful dividends also.
Yeah, makes complete sense. Is like when there is inventory, is there a loss or a wastage?
No, there's no loss.
Okay. And just a last quick one. So the plan for the Mambata facility and the Khalapur, is that still around end of November now, yeah? That's going to be operational.
Both of them are November. Khalapur 100% should be through in November. Mambatu mostly should be in November. Maybe we might see in the licensing part, maybe a month here and there, but there also we are confident of November. Both capacities have been significantly enhanced and changed, meaning much beyond what the capex items were. Mambatu is almost doubled up.
Thank you so much, Sarji.
Okay, thank you.
Thank you, sir. The last question comes from CA Laudavia Anchalia, an individual investor. Please go ahead.
Hi, sir. A very good evening. Am I audible?
Yes, good evening. Audible, sir.
Yes, sir. Firstly, congratulations on a good set of numbers. I hope this legacy of under-promising and over-delivering continues in the coming time. My question is on the cash flow statement front. So as we can see from the recent filings, we see that there is consistently, operating cash flows are negative net of taxes. And this is the trend for the last 2-3 years. So how does one interpret this? Is it because the company is aggressively focusing on increasing the top line, or as you answered the previous question about the inventory management strategy? So how does one link the cash flow, operating cash flow, and the other issues?
I need to understand the question again. Can you just rephrase it?
Yeah, sure, sir. So if we see the cash flow statement from the past 2 annual filings.
Yes.
So if you see March 25, the cash flow from the operating activities was negative 1342.8 lakhs. And for March 24, it was negative 7344.79 lakhs. So what I'm trying to understand is, for business which is in a growth cycle like Stallion, how does the cash flow turn negative if you see on the operating side? Operating side usually should reflect that the whatever profit we are making on a quarterly basis should turn out into cash.
Yeah.
Yeah, so why is the cash flow on the negative side is my question.
So 1 minute. I'm just trying to see the figures, what you're speaking about. The cash, what you're saying is the cash flow is negative in?
The net cash generated from operating activities, the part A of the cash flow statement, that is negative in March 25, March 24, and March 23 also.
I'll need to look into this and get back answer. I'll tell you why. I have not fully understood. I'm not from accounts background, so I have not fully understood your question. What I do is, I will definitely, you have a mail ID. If you can just put it in, or what I do is I get an answer for this and put it up for everyone to see. I'll get you the reply for this.
Sure, sir. That would be really helpful. And the second question was about the execution and the commissioning of the new plant. Like, as an investor, what are like the 3 key performance indicators which you want us to, look at for the next 12 months?
See, it's firstly a timely project execution. Now, timely project execution does not mean you said 10th November, so on 10th, if it's 11th November, it is, bad, it's gone out, something. Normally, the timelines provided by us are 50% shorter than any other company's timelines for similar projects. Now, both these projects, I would ask you all to go and ask, since you'll deal with multiple industries, etc., just ask how much time it would take to set up. There is no company that will give you below 12, not only 12 months, they would tell you 16 months to set up similar projects. So the timelines firstly chosen by us were very fine, meaning very, very cut to cut. Second, a lot of anomalies that move the thing. One is like I said the monsoon. Second, like I said, we enhanced the project scale. So those have an impact on timelines. However, what I mean to say is first you have to keep an eye on the timeline. Suppose if we said November, and if you're coming up in August next year, something is wrong. November, you're coming up in December, fine. Bang on, we are on schedule. That's the first part. Then immediately, is there operational revenue from these plants that have been started up? So the first quarter, there would be some revenue, but it is not, the first quarter is not what needs to be done. In 26, you would have to see significantly the revenue, because both these products, the products that you're taking are all new generation, new industry sort of a thing. They're usually tendered or projects. They're not a market requirement. So it may not necessarily that you start in January and you'll have orders waiting for you in January. That order might hit in like the helium specialty gases businesses. Basically, most of it is tendered business. So you'll have probably a tender in March that comes about, which will be for a quantity that will be for the next 9 months. So you'll see the impact onwards. You'll have an order book, but you may not see an immediate impact here. So these both the new plants, the real impact you would see from April on the balance sheet.
Okay.
Meaning you have to understand the simple fact of the thing is that the HFO business, HFOs are not there in India currently. It's only the new projects coming up, MNCs coming up, the new changes that are taking place, or export-driven growth that requires HFO currently. That HFO will slow, but you have quite a good movement happening in India now. Now the changeover is happening here also. But you may not see, it's project-based. So like Reliance may come up that, okay, this facility is going to change over to HFO-based refrigerant. So this order will probably come in, say, April or something. So, it's not that this facility is lying shut or something. It is operational, everything, but you will see the revenues coming in April. That way. So you'll have to see it in a quarter or in an annual sort of a base thing. Same thing with the helium semiconductor specialty gases. You may not be able to see it in the first quarter immediately of 20. Hello.
Yes, sir. So there are no further questions, sir. Now I hand over the floor to Mr. Shahzad for closing comments.
I thank you all. I thank everyone for this call. I thank you all for the confidence shown in the company. We would be taking up in the next quarter the work that is being started at the Bhilwara facility for the manufacture of R32. We would be taking it up. We would make sure that you all are informed timely of whatever the developments are happening and how we are proposing to move ahead with that. And we again thank you all for all the confidence shown in the company and us. Thank you.
Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.